What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to talk about what the overall market looks like or might look like moving forward. Check it out. All right, guys, so let's go ahead and jump into this video here. Today what we're going to talk about is what I expect with the overall markets moving forward. Next week on the 21st and 22nd, we have the FOMC meetings coming up, where a lot of people are expecting, obviously everyone is expecting, to hear talks about the asset repurchasing program and whether or not the tapering is going to start now, and whether or not it's going to be a quick taper or it's going to be a slow, steady, methodical, small taper, a little bit every month. What's it going to be? The uncertainty is what the market, generally speaking, doesn't like. Markets never really like uncertainty. They want to know either, hey, are we going up or are we going down? Do we have free money or do we not have free money? That's what they want to hear. And now what can we expect? Well, if you want to know just the meats and potatoes of this, without the details, without going into the charts and analyzing the chart setups, well then, if the FOMC meetings come out next week on Tuesday or Wednesday, it says, all right, guys, so we're going to hold off on the asset repurchasing program. We don't think the markets can take it. The economy isn't strong enough just yet. Unemployment is still too much of an issue, and we think inflation is running a little bit hotter than expected. Well, then the markets are going to go up higher. Why? Well, because it's going to be a bunch of more free money pumped into the system, meaning every month, $120 billion is going to be pumped into it, right? Now, if they come out and they say, guys, we're going to start tapering. We're going to start tapering in October, and we're going to start tapering by, $30-40 billion. Oof, market's going to be like, what? Don't like that. And down we go, right? That's my opinion anyways on the subject. If you want to look into it a little bit deeper, if you want to look at the chart setup and want to see what we have to talk about here in the remainder of the video, then do me a quick favor, smash the like button. It's your admission ticket into the rest of this video. And let's go ahead and jump into it right here, right now. Well, guys, before we jump into that SPY chart, let's take a look at it a little bit here and see what's going on. September FOMC meeting preview: has substantial further progress been reached? That's the question that everyone's going to be asking, and the answers that we'll be looking for next week, September 21st and 22nd. The Federal Open Market Committee, FOMC, will likely continue to weigh whether it should buy fewer bonds or if it should continue to hold off on tapering those purchases until the economy is on firmer footing. For months now, we know that the Fed has been, $120 billion every month purchasing bonds, just their standard, that's their stimulus to the market, right? But right now, they've been talking for a while now about tapering that asset repurchasing program, bringing it down. How much so? We don't know yet. Maybe next week they'll give us some clarity on that and tell us, hey, you know what, we're going to be tapering 10 billion a month, right? Until we get to the end, which the market would love if it was something that small. The market would love it 6 months to a year. A year, probably not going to happen. 6 months more than likely. But what might happen next month? Next month, they might come out and say, hey, we're not tapering just yet. We don't feel like the economy is strong enough, so we're going to keep propping it up with this program. And, maybe they'll run it for another couple months or a little bit longer, just depending on what they see is needed. So that all depends on them. Now, what can we expect to see happen prior to that meeting? Well, one thing's for certain. Here we are. Here's the 50-day moving average, that blue line right there, okay? And we've been expecting a bounce off that level. We got a nice little bounce yesterday. Nice little bounce yesterday off that level. Now, if we go back and look at what, basically history, what do we see? A big drop towards the 50-day, a big bounce off of the 50-day. What do we see here? A big drop towards the 50-day, a big bounce off of the 50-day. What do we see here? A big drop towards the 50, a big bounce off the 50. Same here. Same here again. All right. Again, same here. All right. A violation of the 50, but a quick bounce off of that level and gone. Same here. A quick bounce and gone. Back here. a quick bounce and gone. You could see that it doesn't stay here. It just taps, goes, taps, goes, taps, and goes. Time and time again, right? Never has it just sat there, right? Look at the chart. Never has it just sat there. Right now, what are we doing, guys? We're just sitting there. We are just sitting right there. And that support level is weakening. Typically speaking, that is a sign of support level weakening. What would we have wanted to have seen there? Today, continuation to the upside. That's what needed to happen today. We haven't gotten that. We haven't gotten that continuation to the upside, right? That's what you would have wanted to have seen, right, in the coming days. A quick tap and gone. We've tapped and sat there. And much like a trampoline, like I always say, sitting in the sun, rain, wind, and constant elements, right? That material from the trampoline begins to weaken. And when it weakens, what happens? It eventually gives out. And eventually, you come on down here to try to like bounce off, and oh my God, it broke down. And that's what you get, right? Now, where could there be support? Well, potentially, there could be some support right around here, previous all-time highs, and you can see clear-cut big-time support that kicked in that general area, right? A little bit further down, you could possibly see some, maybe down here in the 434, 435 area before we get a bounce. So I think this is very possible even before the meeting results next week. All right, so just something to keep in mind. Well, guys, those are my thoughts. Let me know what your thoughts are. Drop them in the comment section below for me. Remember to subscribe to the channel if you haven't. Hit the notification bell so you're alerted when I upload my next video. Check out Webull. Download the app, fund the account, and you just need $5 to fund it with, and you get free stocks. That's in the description and comment section, as well as you have 5-day trial to the daytraderchatroom.com. You can come trade with me, access to the dashboard, video lesson library with over 200 videos, and much, much more. So those links are there in the description and comment section, as well as the trade ideas. 15% off coupon code for you down there in the comment and description section. Smash the like button for me if you enjoyed this, if you learned something. Let me know your thoughts. What do you think the overall market's going to do next week? And hit the notification bell so you're alerted when I upload my next video. And I hope to catch you on the next one. If the Fed comes out next week and says, guys, we are going to keep purchasing $120 billion a month worth of these bonds, then we get a bounce.